Good morning, good afternoon, good evening. It's your boy Gary Scott, Solid Pip Assassin, back with another video, guys. On this video, I'm gonna just be going in a dive into how I look at the market, things that I've been working on throughout this year to more enhance my method in itself. Again, my method is just straight structure based trend, and then finding areas of values to take those trades from. All right. It's nothing that the market hasn't given us before, but I look at it from a different scale, and a different view. So, with that, let's just get straight to it, right? If you watch my previous videos, you kind of have an understanding of what I look for, to give me my directional bias or where I believe price could go, right? Nothing is guaranteed in the market. My method is not guaranteed to work 100% of the time, but I do believe and I do know that it can definitely put you in position to win a lot more trades than you lose, right? So, that being said, guys, let's get straight to it. So, first things first, it's identifying which directional bias does the market look like it's heading in, right? That's first things first, and understanding what certain patterns mean in the market, right? So if we look here on this little sector here, we see how we have these particular patterns. This is called a double bottom. This is called a triple bottom. And this is called a inverted head and shoulders. All right. These patterns indicate that price is going to head in an upwards trend, right? So when you see these patterns, they can either start a trend or be continuations within a trend to let you know that price is going to continue to move in an upwards motion for the most part, right? So now, when we get here on this written example, price drops down from this level, pushes up. But this level does not go back above this particular point, right? And because that's the case, what are we looking for price to continue to do? Push back down. But what do we notice? The last time price got here, it gave us a push up. So the next time price got here, right, what did it end up doing? It gave us a strong push up towards the upside, creating a what? A double bottom. All right. That double bottom in the process takes out one lower high, and then it also takes out the second lower high that was on the back end. So now when lower highs get taken out, new highs are created. And when new highs are formed, what are you looking for price to do? Retest. All right. Now, what do we notice? This level here doesn't go past this level, but what it does do is it does respect both of these levels in the process of it pulling back, right? What that then indicates and what we want to see is bullish candles closing above these levels. Because then if we get that, right, we want to see bullish candles close back above those levels to go eventually take out these highs. So what does that do in the process? It gives us a break of structure towards the upside. Price creates a new high. It then decides to retest. When it retests, it does not fall below this previous higher low, right? Instead, it creates a new higher low at a potential area of value within this move towards the upside, right? So when price gets here, it consolidates and then it pushes higher, eventually taking out this high, right? Price takes out this high, creates this new high here. And then what do you have? Your retest phase. So every time price takes out a high, it's always going to give you a retest phase to find an area of value within this move pushing towards the upside, right? So now, once price gets to those areas of values, which is either a fair value gap, a right, an order block, or in this case, a demand zone, right? And then you also even have your structural zones, right? Your structural zones. So these are the areas of values that we look for when price is dropping down lower than where structure is, right? We know that these are the structural levels. If price drops below that point, it's more than likely finding either a fair value gap or an order block, right? If you want to just dial back instead of like using all three, you can minimize it to just two or one areas of value you tend to want to look at more than any other one. But figuring out which one works best for you and then attacking that area of value every time you get a break of a high to create a new one so that way price can retest. And you always want to see price either revisit one of these three levels. And every time it's going to do that if it's following the trend how it's supposed to, right? So we get a push up, a new high, we get a retest phase, right? Price creates another higher low because this higher low is higher than this one. What does it end up doing? It ended up creating a new high, ends up breaking this structure. But in the process, what ends up happening? Price takes out this higher low, it takes out this higher low, and it even takes out this one. So in this push back down, it broke structure towards the downside and it also took out higher low points. So when that happens, this is letting you know that the market is getting ready to shift from then going from an uptrend to then now going into a downtrend because price is taking out these higher low levels. All right. So that is basically giving you a price shift, right? Price shift back towards the downside, price shift. So now let's go look at a live example of how this would actually look in real time, right? So now we're here. We noticed that the market gave us a strong push from this level back towards the downside, right? What ended up happening? Price respected this level and it pushed up higher. But what happened? This level didn't go back above this level. Instead, it pushed down, coming back down towards the same level that price stopped at once before and gave us a push. This time, what did it do? It gave us another push. And in the process, what happens? Price takes out a lower high here, and it also takes out this lower high here, indicating that price has just created a newer high, right? So in the process, what happened? Price decided to retest. It stopped in between both this level and this level, right? But what eventually ended up happening? You end up getting bullish candles closing back above these levels with some form of rejection. So now we want to be able to look to see if price can go take out this high. And it did, right? Price gave us a broken level of structure, created a new high, and then what happened? Price consolidated, didn't fall back below this level. Instead, it maintained its higher lows structure. And then what ended up happening? Price created a new high and it ended up breaking this level of structure. Okay. What do we end up getting? A retest back to its structural level. And right, what do we end up having? Bullish candles continuously closing back above. Price ends up breaking structure, creates a new high. After it creates this new high, what does it then do? It then starts to fall towards the downside, takes out this higher low, takes out this higher low, and it also takes out this higher low, which is indication that the price is going to more than likely shift from moving from an uptrend to then now transitioning to go into a downtrend, right? We got three higher lows taken out, we got a new low being created in the market. What do we end up having? Price pushing back up, manipulating above these highs. And then what do we end up getting? A bearish candle closing back beneath this level. The last time price traded below this level, what ended up happening? It dropped. So when price got here again, what did it do? You take an entry, price ends up dropping, right? But it ends up retesting, it never closes back above this level. Instead, it drops down and eventually takes and breaks this structure. Right now, when price ends up breaking this structure, that's indication that price does want to move a little bit lower. But in the process of that happening, price pushed up, went to go grab some liquidity that was left above this level right here. And then there was either also an order block at this level as well, right? That hasn't been touched. So price came back to those two levels, dropped back down and closed below this level like it did once before. And then last time it did that, it dropped. The time it did it before that time, it dropped as well. So the next time we got a candle closing beneath this level, right? That's indications that price is more than likely wanting to go where? Back towards the downside, right? Remember, this was the new low that was just created. So now that price is traded to this level and actually even broke it, we know that price wants to go where? Even again, it's going to retest, create a lower high, and where is price going? It eventually closes back below this level. And what happens from that point on? Price ends up trading back to this major low here that eventually took out these higher low points, right? Price trades right back to that level and it eventually ends up closing beneath it strong, right? What does price do? It dropped here, right? The last time price traded below this level, it gave us a drop. So look at this. If we take this and we follow this line all the way across, the last time price fell here, it gave us a big drop. So now because price is closing below this level yet again, right? We drag that all the way across. The last time price traded and closed below this level, what did it do? It fell, right? So when price got here once again and it dropped below and closed below, what are you expecting for price to do? Drop. A retest phase comes, it fills up this fair value gap right here. What is a fair value gap, Gary? What does it look like on a downwards move? A fair value gap looks like this, consists of three candles. One, two, three. We know that's this wick and this wick of those two candles. They don't meet in between the body of that candle there, which causes a fair value gap, right? That's what a fair value gap looks like in a downtrend. You also even have one here, right? You have one here, and then you also even have one here, right? What does a fair value gap look like in an uptrend, right? Consists of three candles, one, two, three. This candle's wick and this candle's wick does not meet in between the body of this candle, which gives us a fair value gap zone. All right, from wick to wick of those two outside candles, we see we have a fair value gap level here that price respected. All right, that's what fair value gaps look like, right? You even also even had one here, fair value gap between one, two, and three. That middle candle has space in between because these two wicks don't meet. So that gives us a fair value gap there. All right. They appear everywhere. All right. We got fair value gaps here and even here, which are areas that price came back to touch when price traded back towards the downside. But what do we notice? Where does price trade back to? Back to a level that it had once been to before. And the last time price got here, what did it do? It bought. So the next time price got here, what did it do? It bought. And instead it retested. Price traded back to a structural level from wicks to bodies. Those are our structural levels, right? That's how a structural level looks. Remember, I told you price is going to create a low, retest back to a structural level or a fair value gap or even an order block. Now, what does an order block look like in a downtrend, right? This is the last up candle before price broke this level of structure. So at some point, price is more than likely going to get back to this point at some point. It's just a matter of when. But this is what an order block looks like. You have structure being broken here. This is an order block because this is the last up candle before price broke towards the downside. This is new structure, retest, price broke structure here. So this is also an order block because this is the last up candle before price broke structure, right? In an uptrend, what does an order block look like? It's the last down candle before price decides to break structure. The last down candle before price creates a new high, right? And we have them here. Last down candle before price created a new high. You see them. One, two, and there's also some down here, right? The last down candle before price break structure. Price is going to find a way to retest to those levels and gave a reaction off of it, right? So that's what we're kind of looking at, right? So right now, what you have is price creating a new low, retested back to structure. Price gave us bearish candles closing beneath. We take that trade as sales go above, and then now we're trading back where? Back towards the downside because we're in a what type of trend? We're in a downtrend. Price just created a new low. So what do you think price is setting itself up so to do? To retest back to the last up candle before price cleanly broke this level of structure, right? And this one, you have an order block here, you have an order block here, right? But we have an order block that's next to a structural level. So price is more than likely going to be key to react off of this level because not only is there an order block here, there's also a structural level here as well, right? So you want to see price retest back to that level to then push back towards the downside. All right. So if you guys need to rewatch this video again, I always will suggest you to do so, right? Because what I just did is I basically just showed you how the market tends to operate when certain things happen and where you actually need to take these trades from, right? We noticed that once price broke this level and created this new high and traded back to it, and then it started to give us bullish candles closing above, we know that we need to take action back above this level. New highs created, retest happens. New highs created, retest happens. And every time it retests, it's going to find one of these three areas of values. It finds a fair value gap here, pushes higher, falls back down, takes out these higher low levels, creates a new low. Price goes and trades above a level, and then it trades back below it. Last time price got here, it dropped. So the next time price trades below this level, what does it do? It drops, retests, drops again, ends up breaking structure, showing that the price wants to continue to move where? Back towards the downside. So what do we have? Price trade back above this level to grab the liquidity, which is basically areas of values that haven't been touched on this end, which is a fair value gap right here, right? And a structural level. What does price do? It trades back down and gives us a strong candle closing beneath this level. Yet again, what ends up happening? Price trades back below, takes out this low that it created, creating a new low, having a retest phase to then create another new low, another retest phase back to structure. And then where does price go? Back towards this new low that was previously created. And then price just trickles down from that point on, right? Going back to a level of what started this uptrend in the first place, right? So if you just kind of pay attention to what the market does at certain levels and then just basically dictate what type of structure is being formed, you'll be able to kind of be able to identify where you can take certain trades to, right? Hopefully this video helps you guys. If you want to watch it again, please feel free to watch it again. It's not going to just be a one time you look at it and get it, right? You may learn pretty fast with what I gave you on how the market truly operates. And this is throughout any pair, any time frame, right? You just have to solely pay very close attention to structure because it'll tend to tell you where price is going to go more times than not, right? But with that being said, guys, it's the end of this video. I hope you guys enjoyed it, and I'll catch you on the next one. And Happy New Year. Peace.